After a very busy tax season, we are back today with a great topic that a lot of you who maybe follow the financial news or business news are very familiar with, and that is rising interest rates. Now, Corey, with everything going on in the world right now, with supply chain issues and inflation and war in Ukraine, this is one more thing that might be causing our viewers some anxiety and some stress. But we're here to tell you today that if you play your cards right, for those nearing or in retirement, rising interest rates actually might not be such a bad thing.
I think they're a good thing, Amber, for those, again, nearing or in retirement for a few reasons which we'll discuss today. In this video, we're going to talk about why rising interest rates might be good for you and what you should do to take advantage of them.
So first, let's talk about the bad news. Why are rising interest rates maybe a negative, and who might those impact negatively in retirement?
So those carrying debt would be negatively impacted by rising interest rates on your mortgages, on your lines of credit, your HELOCs perhaps. Those trying to buy a home, real estate with mortgage rates have gone up considerably since the Federal Reserve has started raising interest rates. So those people are negatively impacted. Now for those nearing retirement or in retirement, they probably already locked in their mortgage. They're probably not going out and getting a new home, or the mortgage is paid off, so that's less of a deal.
Okay, well, there is one type of investment that is very common for retirees that will actually be negatively impacted by these rising interest rates. I'm talking, of course, about bonds.
Right. So as interest rates go up, bond prices go down. And this has been the struggle now. The Federal Reserve has already raised interest rates, and we're seeing the bond market lose value. The Federal Reserve has announced they want to raise interest rates several times in 2022. So every time the Federal Reserve raises interest rates and bond interest rates go up, the corresponding price of the bond goes down. So we're going to talk about what you should do if you have a bunch of bonds in your portfolio in just a minute.
So we talked about those who maybe are negatively impacted by these rising interest rates, but how can our viewers benefit from rising interest rates?
The number one winner in the financial market for retirees and near retirees when interest rates go up is hands down fixed annuities. And the reason for that is fixed annuities are interest rate products, right? An insurance company buys hundreds of millions or billions of dollars worth of bonds, and they have interest that comes in off of those bonds. They turn around, they take off their profit margin and give the rest to their annuity owners. So as interest rates go up, as they can buy bonds at higher interest rates, they're going to have more of that interest to go to their annuity owners. In fact, according to a recent Kiplinger's Personal Finance article, they suggested that for every 1/4 point increase in the federal funds rate, that will equate to a 1.5% increase in annuity payouts. That's a big deal. You can imagine if the Federal Reserve raises these up by a full percentage point, for example, that could be 5 or 6% more income from an annuity payment for those who are looking to have annuities be part of their guaranteed income in retirement.
So what is the action that our viewers should be taking? Maybe those who are already in retirement and hold some bonds in their portfolio, or those who are nearing retirement and are looking to make a plan?
Well, what we're suggesting to some of our clients right now is if you have a large 60% of your portfolio is in bonds or 40%, take a portion of that and look at going into a fixed annuity instead. The fixed annuity cannot lose value, first of all, and then as interest rates go up, those annuities will continue to perform better and better. We're seeing some people prefer shorter term, maybe like a 5-year term to kind of see where interest rates play out over the next few years, but that would be one option, Amber, is to start shifting some of your bonds to an annuity. The other point I want to make for those nearing retirement, now is a perfect time to start figuring out how much guaranteed income you can get in retirement from an annuity. Again, we just mentioned those payout rates are going to be going higher as the Federal Reserve raises interest rates through 2022. And so now would be a good time to start shifting some of those risky assets, maybe repositioning those to purchase some guaranteed income in retirement.
So now is the time for you to be really examining your portfolio and seeing if it's performing the way that you want it to. And if you want to know a little bit more about bond alternatives, don't miss our videos that we've done on this topic.
Right. Yes, we have done other videos that talk about using annuities as a bond alternative. And this will be a topic going forward. As long as the interest rates are going up, we're going to have to find some alternatives to bonds until they kind of level out in the next couple of years, and then we'll hopefully be back to that more traditional stock and bond mix. But until then, the annuities, as they continue to increase interest rates, payouts will go up and returns will go up. A lot of our clients have Amber, fixed indexed annuities, which means they can go out and say, hey, right now the insurance company will give you 2% on your money, or they'll take that 2% interest and go buy an option on Wall Street that can give you a better return if the markets go up. Well, if now that interest rate jumps from 2% to 3% or 4%, now they have twice as much money to buy those options so they can give their annuity owners bigger and better returns. So if you already own an annuity, I would expect that those returns over the next couple of years will do better than they have in the past couple of years.
So these rising interest rates really can be good news for a lot of our viewers.
That's right. So if you want to know more, if you have questions about your portfolio, feel free to reach out to us by going to workwithnewgen.com. You can schedule a 15-minute introductory phone call, see if we can help you somehow.
Because remember, you can make the rest of your life the best of your life.
Plan now and retire happy.